If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. An economic calendar is the schedule that moves markets. It orders upcoming events, indicators, policy decisions, and data releases. This is the 2025 Economic Calendar, a trader's timeline. Stay ahead, know the schedule, manage risk. In this video, we explain the calendar, key events, and market impact. Traders face information overload. Events come from hundreds of indicators across countries. Decoding importance levels is critical. You need rapid signals for high-impact releases. Misread one release, risk swings in portfolio. Pain point 2, timing. Weekly, monthly, quarterly frequencies, you must prioritize what matters now. Pain point 3, global scope can confuse focus. Filters and sorting are essential. Pain point 4, integration with tools. Exports via API, XML, CSV, Oregon, JSON enable workflows. Automation cuts manual errors. But too much data without context is dangerous. Pain point 5, understanding indicators, GDP, inflation, employment. You need clear classifications and context. Trend arrows and annotations help interpretation. Now let's dive into the data structure. The calendar is both historical ledger and forward planner. Updates are continuous, recency matters, high, medium, low, color code for quick scans. Next, a data dive with rapid visuals. We will cover indicators, exports, and forecasts. The calendar aggregates actual values, consensus forecasts, and previous readings. It maintains historical time series across hundreds of indicators. Importance is classified with a color code system. Filter by country, region, indicator, and importance. Indicators include GDP. Inflation measures like CPI are tracked. Unemployment and employment data matter. Rate decisions are high-impact events. Trade balances and current account figures are included. Manufacturing and services PMIs are paired with business confidence. Retail sales and industrial production appear frequently. Money supply and government debt metrics are listed. The calendar supports export via API, XML, CSV, Oregon JSON. This enables seamless integration into dashboards. Events occur weekly, monthly, and quarterly. Recency tags and revisions are clearly labeled. Forecasts for 2025 and 2026 are available. Actual values are recorded promptly on release. Revisions are labeled to track reliability. Trend arrows and icons indicate increases or decreases. Sorting by importance helps allocate attention. High-importance events include rate decisions, CPI, employment, GDP, medium impact, PMIs, retail sales, industrial production. Low impact includes certain current account and budget data. Week-ahead summaries highlight key anticipated releases. These summaries capture shifts in sentiment and central bank posture. Importance may be volatility-based to signal potential market moves. Alerts and custom views help professionals stay informed. The platform covers 196 countries with global reach. Regional or sector-specific strategies are supported. Save filters for high-frequency workflows. Sharing via exports enhances collaboration. Forecast data lets users anticipate releases. Compare forecasts with historical context. Timestamps indicate when numbers were updated. Snapshots allow quick daily scans. Example, full-year GDP forecasts are displayed. Inflation year-end readings are often included. Rate expectations help position markets. Sources and labels help trace data origins. Historical revisions are part of the data trail. Markets react quickly to surprises and revisions. Set alerts for high-impact scheduled releases. This enables swift risk management. Custom dashboards provide focused views. Focused views are useful for regional strategies. Sector-specific filters help specialists. Exports power reports and quick analysis. Frequency tags signal weekly versus quarterly importance. Confidence indicators can precede economic turns. Budget data and debt ratios are tracked. Context is the difference between noise and signal. The calendar evolved through 2024 into 2025 for better usability. Recent updates keep the platform current and relevant. Interface refinements improve navigability. Mobile and desktop support ensure accessibility. Heat maps help visualize global risk windows. Use sorts, filters, and alerts to stay ahead. The calendar is essential for professional market participants. Next, 3 real-world case studies and timelines. Case Study 1, USA 2022, Timeline and Market Impact. Week ahead. Summaries highlight central bank and inflation releases. In 2022, inflation surprises moved rates and equities. Location tag, USA 2022. Use timelines to trace effects. Yield curve shifts followed rate expectation changes. Traders adjusted positions using alerts and forecasts. Revisions altered implied risk profiles. Week-by-week summaries helped navigate volatility. Case Study 1 illustrates timing and alert use. Next, Case Study 2, Regional Focus. Key takeaways: classify importance, set alerts, use exports for reporting. Case Study 2, Europe 2023, policy moves and data surprises. Track regional releases, filter by country and indicator. GDP and inflation shifts altered central bank communication. Location tag, Europe 2023, timelines show policy sequence. Market implications were immediate for rates and FX. Forecasts and actuals shifted currency flows. Business confidence can lead growth recovery signals. Sector filters identify where shocks matter most. Share exports with teams to align strategy. Next, Case Study 3, Emerging Markets Timeline. Takeaways: use filters, track revisions, leverage forecasts for positioning. Case Study 3, Emerging Markets, Volatility and Opportunity. Emerging markets often have higher volatility around data releases. Trade balances and FX responses can be significant. Use location tags like USA 2022 inches or regional labels for context. Timelines show sequence. Data, central bank, market reaction. Alerts help traders capitalize on opportunities. Compare historical behavior with current forecasts. Risk management is essential when volatility rises. Exports support team-based response plans. Case studies demonstrate timing, context, and tool use. The calendar guides practical decisions. Analysis: connect patterns between indicators and market moves. Correlation across indicators helps predict market behavior. Use heat maps to identify high-risk windows, contextualize forecasts, watch revisions, and prioritize action. Compare countries to assess global spillovers. Sequence matters: data, expectations, policy, markets. Central bank signals often drive medium-term trends. Build strategies based on importance levels and timing. Always weigh risk-reward. Use alerts, exports, and filters to implement. Summary: timelines, importance, forecasts, and exports are core to a professional workflow. The calendar enables preparation, not just reaction. Checklist: prioritize high impact, set alerts, save filters, export reports. With these tools, you can turn the calendar into a strategic asset. Recap: the 2025 economic calendar combines historical data, forecasts, importance ratings, and exports. Use filters, alerts, and custom views to stay ahead. For investors, timing and context are the difference between opportunity and risk. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.